But alright, I'm recording. So we've seen this low resistance signature up here with this breakaway gap time based, and then this institutional order flow entry drill just partially filled fair value gap being respected. And then we trade lower into this end dog, and then as soon as we tap it, now I want to see, do the first three bearish PD arrays hold up? Because if it's going to stay in low resistance, that's what it's going to do. And so we got this fair value gap right here. We've got this breaker right here. So let me just, I'm just going to go over the logic one more time for breakers. Which is just, it creates some sort of high. And then it creates some sort of low. So this is a bearish breaker, by the way. And then it creates some sort of higher high. And then we break lower. And the lowest black candle, bearish candle, in this price run would be your breaker. So you'd want to look for it to trade up into it and then trade lower. That's what you're looking for. And then in this scenario, we have it created this high right here, this high. And then it creates this low right here. And then we go all the way up here and create the higher high. And I know it's extended, but I'm pretty sure, I could be wrong about this, but I'm pretty sure it's still a breaker. And I think this could be considered a breaker as well if you're going into the logic of it. But I'm just going to ignore that.
So you're looking for like the first PD array to hold, but what about that fair value gap? Where you like...
It's, okay, yeah. So I get, it's like, it's been a little bit disrespected. It's been closed past, you know what I'm saying? But then I have to allow for that. Because this is just the first PD array. You know what I'm saying? Like, it's aligned with the breaker, but it's just the first one. And then we've got this order block up here as well, right here, these two consecutive green candles.
Oh.
So I'm looking for these three. These are my three PD arrays that I'm focusing on, and I want to see, do these hold up? Or will it trade above it and then enter a high resistance or, like, bullish conditions or, like, whatever it wants to do? But in this scenario, we tap it, respect the order block. I'm actually going to connect it to the bodies. So we tap it. The bodies are respecting it right here. We don't close inside of it. And then around this point is also midpoint of this breaker. So that's good. You want to see the bodies stop around here. And then we trade lower. And then now this fair value gap from earlier that got disrespected, it's getting reclaimed. You see the bodies around the high of that fair value gap, right in this little. So the fact that the bodies are respecting that, that's already like, you've got a nice bearish signature right there. But I personally, I'd want to wait. At this point, I'd want to wait for either another signature or for it to get beneath the end dog. But then right here, this was the peak moment. We trade higher, tap, like, wicks above the fair value gap again, taps midpoint of the breaker, and then it taps the body of this order block right here, the order block I've been looking at. And then the candle flips bearish. So it's in an area where I would already expect it to have some sensitivity. And then now the candle is, like, flipping bearish after it taps the order block. So there's, like, a perfect long signature. The bodies are still within the fair value gap, so it's still being reclaimed. And then we trade lower. So I'm going to take everything off besides the fair value gap now.
A little question.
Yeah.
So, like, do you just look for the first three PD arrays whenever you see an end dog, or is it because you saw that price has, like, a chance to go lower since it hit those things up there? I forgot what it was, but...
Yeah. It's kind of both. So, like, because these are here, now I can especially look for the first three PD arrays to hold up.
Yeah.
And because it's already shown me a signature of low resistance. So if it was in high resistance, what would happen is, like, back here, what happened here. It taps the end dog, or let me actually go back to this scenario right here. It taps the end dog, aggressively goes a little bit past it, but then the first three PD arrays don't hold up. So like, well, actually, one thing I do want to mention. This is it has to do with the first three PD arrays. If you have a scenario where, so like in this case, we have this buy side right here, and then the end dog high, we're still tapping it. The buy side is a little bit above the end dog high, but that's fine because it's still tapping it right here. If you have a scenario where the buy side that we swept is in close proximity to the sell side, and what that usually means, like close proximity usually means there's like you can't really see obvious PD arrays between the buy side and sell side. All there is this like potential order block. And that you can't, like, that's not enough. That's just one PD array. So like I can't be like, okay, there's my three PD arrays that I want to hold up, because this is just one. And you could like make the argument like, oh, this wick is your second one, and then this fair value gap is your third one. But then like it's cleaner to look for the sell side, you know what I'm saying? But let me see. Okay, for example, like right here, I guess this kind of goes into the buy side, but it taps the body's closed right on the low of this end dog. And let's say we were bearish because it ended up, sweeping the low another time. When it taps this low of this end dog right here, the second time when the body's closed right on the low, you got three PD arrays. So this fair value gap, this volume imbalance, and included with the volume imbalance is like this combination order block, so these two green candles. And you would want that to hold up if you were bearish, but since we're in high resistance conditions, like it just it's needing to have deeper tracements and stuff, like that won't hold up the first three PD arrays. And when the first three PD arrays don't hold up and you're still bearish and you expect the high resistance, the way you can trade it is go to a higher time frame and see if the first three PD arrays hold up there. And you want to mainly like stick to that time frame, I'm not gonna lie. But that's a little bit besides what I was getting at. So back here, the first three PD arrays are holding up. We've got some nice signatures. You can go short here. And then, and another signature, the body of this, so like we're consolidating inside this fair value gap for right now. Then this body right here, we open up inside of the fair value gaps and we close aggressively outside of it. And then it ends up creating a fair value gap right here. So I want this to be treated as a breakaway gap. And it got filled, which is fine. This is kind of like an immediate rebalance signature, where I mentioned like if the candle right after the fair value gap is created, the first candle goes up and taps the high of the fair value gap, that's an immediate rebalance right there. So we've got an expected breakaway gap that ended up creating an immediate rebalance. So I can expect speed around here. And yeah, trade lower pretty aggressively. This comes back for retracement, which is fine. I guess I wouldn't have wanted it to go this deep, but the bodies still respect this fair value gap, which is okay. And then we trade lower, attacking the sell side one more time. And yeah, that was just a pretty nice clean run. Because when you're in high resistance, if you expect a bearish price run, you can just look for the last like liquidity that was swept, I guess. Like normally when the market like sweeps a low and then goes higher, that low should kind of be like protected and it shouldn't revisit that low. But then when we're in high resistance and it's just like consolidating, grinding up, that low will be attacked most likely. Yeah, and then let me get into my trade. So I'm expecting the high resistance, and I've also I'm paying attention to this price one right here because we've been consolidating inside of it, and I don't want it to be in a seek and destroy potentially, and like I get caught off guard. So with the seek and destroy, the rules that I've taught, it's better not to trade, but the rules that I've taught is you want to look for a sell side sweep and a discount, and then a signature that we're going to go higher, or vice versa if you're trying to go short. And so this red line is the midpoint. We sweep all this sell side right here and trade into a deep discount, which is like optimal entry for if you're in a seek and destroy, and then trade beneath this sell side, which if we were in high resistance bullish, this is kind of like the last place I'd want it to go to. And then we have these 3 consecutive black candles back here. These 3. And you can technically, I'm pretty sure ICT said, like, if there's consecutive, like, you can take it for as many as there are. So, like, I think there's, like, 6 right here. 1, 2, 3, 4, 5, 6. So you could technically use this as your order block, too. And that would still, like, serve you well. But then the idea is, like, it's still, you can, like, use kind of any of these. Ideally, it's going to be, like, 1 or 3. Yep. Or like kind of like an important time frame, like 1, 3, 5 or something like that. That's ideally what I'd look for. But then, so with these 3 that I'm taking, which also aligns at like the bottom end of this fair value gap, we tap the body, the high of the body, and then the candle flips bullish. And now this is just like a higher risk entry that I took the other day. Just because it's the conditions we were in didn't really it was better to just not trade. But then the fact that I saw all these signatures, and we were in a deep discount, and then the signatures, I was willing to take a long, and then if I took the stop, I was okay with it because it was just higher risk. And then with the seek and destroy tradability, you want to look for it to sweep buy side and head into a premium. With my trade, just in case I was wrong, I really wanted to lock in some profits, so this minor buy side right here, I took some profit right here as it filled this fair value gap. Mm-hmm. And then I wanted to see, which we ended up doing, I wanted to see it continue with speed towards this buy side. And then that's where I took my second contract off. And that was a really nice clean run. And then we come right back down into the inversion fair value gap now. And then trade higher. Use this end dog to trade higher, but we're having deep retracements. So high resistance. And this is like sloppy high resistance. Disgusting. And then we trade to the high of the identified seek and destroy range, so like potential, I guess, seek and destroy range. And then after we sweep the buy side, we head into a small high resistance bearish. So the fact that it couldn't sweep this high out, and even if it did, as long as it was quick about breaking lower, I could still assume that it's like high resistance bearish. because that's just like the 2022 model, you know, buy side, market structure shift, fair value gap, or whatever. But yeah, it's good that we didn't sweep this high, and it'd be nice if we had some SMT too, but I'm not going to go and look at that. And this old buy side as well. So the high of the seek and destroy range, we tap that real perfectly when we sweep out these highs right here. And a reversal pattern that I mentioned is high resistance bullish, shift to high resistance bearish, and then shift to a low resistance bearish. And it doesn't have to shift to low resistance bearish. It can stay in high resistance bearish, or even shift to low resistance bullish, even if you've got the right signatures. But in this scenario, we shift to low resistance bearish, which is seen with this time-based breakaway gap right here. And then that gap stays open. And then next fair value gap right here. We left the high of that open, which is good. If we didn't, I couldn't even, if it traded to the high of this, I couldn't consider it an immediate rebalance, because it should have been this candle that did it, not the second candle after the fair value gap's created. So this is my institutional order flow entry drill. And then also I want to, let's get back and grab let's grab this fair value gap. This is the current 130 first presentation. I could be wrong about it because there's bodies laid behind it. So this whole block of price action back here, the fact that that's overlapping with my fair value gap that I'm looking at, the 1030 or the 130 Eastern. I don't love that. I'd prefer to take another one, but the next one that follows the rules was at 10:55 or 1:55 Eastern. And I want the first presentation to be created before 1:45 ideally. So between 1:30 and 1:45, that's where I'd want my first presentation to be formed. But so yeah, even if I take this one, we trade lower from that institutional order flow entry drill, sweep this sell side, and that's kind of that's all you'd really need for your trade potentially, because the logic that I shared earlier, if you're in high resistance bullish conditions, and by the way, when it shifts to low resistance bearish here, that just means that we're shifting to target sell side, and then that's all. If it picked up speed higher after sweeping the sell side, then I would assume that we're still in high resistance bullish and it's got a little bit more room to go. But then we sweep the sell side, and by the way, I'm paying attention to the sell side right here especially, because this swept liquidity and closed on the low of the end dog. So if we were in high resistance like we've been in here, or I guess this would be a nice anchoring point too, because we've been in high resistance, I mentioned any low that if we sweep lows and then trade higher, that low should normally be a protected low, but if we're in high resistance, that low is going to be targeted. So then this would be a nice anchoring point for my low. But then you could use this down here as well. I guess I was wrong about using this one. This one would be more prominent. So yeah, if we picked up speed above this, then I would assume that we're still in high resistance bullish and we got room to go higher. But then we don't. We are willing to stay beneath it, and that earlier 1030 first presentation that I pulled out, this right here, I'll make it green. The bodies stay inside of it. And that's kind of the exact thing you want to see. There was some more stuff here, some old first presentation or whatever, but it's not a big deal. You didn't need all that. Yeah, so this was a nice run lower. The bodies don't respect the end dog at first, which is fine because you see how the first presentation and the end dog overlap. You kind of want to use them as like one point. Yeah, so the bodies close right around the high, I guess, of the 131st presentation, and then we break lower, and then we perfectly, almost perfectly tap the end dog high right here, and then start to break lower aggressively. And then I don't know if you could use it this way in this scenario, because we're not in a obvious premium, but this order block right here with these two consecutive green candles, we tap it, flip bearish, and aggressively expand down again to the south side one more time. And then this was I think this was the low of our seek and destroy range, right? So the seek and destroy range we were looking at earlier, this is the low of it. So that's a real nice play I like to run, where if we lose speed, so if we're in high resistance and we lose speed after sweeping one side, and ideally we create some relative equal highs right here too. So like this high and then all these highs right here. We sweep all those and we lose speed and start trading lower aggressively. I can assume that it's very likely that it's going to want to try to trade down here to the south side of the expected seek and destroy range. And yeah, so that was one trade in the day, I guess. And I also want to mention this from last night, because this was just a setup I was looking at, and it was really clean. We create this end dog right here, and then we slam past it, and we need upside trading in it now. So like we open higher, and then we only trade, like this is only bearish candles inside of it right here. You see that? When we're trading past it.
Yeah.
So that means that we need bullish candles inside of it too, because it needs to be filled both ways for it to be efficient price delivery. It doesn't always need to do that. If it's really bearish, it won't do that. But in this scenario, I mentioned last night, it was kind of like a mixed bias. You didn't really want to assume it was going to spool one direction or the other. But yeah, so I want to go into this with the expectation that we're going to want to go up and fill this. So with bullish candles, we're going to want to trade up into the end dog. And right here, this is all like high resistance, bullish price run. You know what I'm saying? You don't really want to be, especially when it's like super deep like this, you don't really want to try to trade it. Like I'll trade high resistance sometimes. And if I get like a real nice discount entry and I'm willing to hold, like I'll trade it sometimes. But especially when it's not New York, you know what I'm saying? It's not like your specific times and it's super deep retracements, you just want to avoid it. But while we're doing all this high resistance, we generate relative equal lows. I'll just anchor it to these two. And then sweep it aggressively, come back up aggressively. I bet, I'm not going to do it right now because I'm going to have to go back to it, but I bet this is like a higher time frame Venom model right here. So like on the 15-minute or whatever, maybe on a higher time frame than that. We probably went down with a single candle and then came back up with a single candle. So let me go find it actually. So 15-minute, not as clean. 1 hour is pretty nice. So we sweep the lows. Actually, 1 hour is not as clean as I thought. Maybe 30-minute. Yeah, it's pretty clean. We sweep the lows with one singular candle, aggressively slam into it, and then one singular candle, we slam back up higher. You know what I'm saying? I guess it didn't really have a retracement on the 30-minute, but that's fine. But we slam higher, and anywhere around here, like I don't see like a nice good long entry that I could be comfortable in. But this was a nice, clear, like low resistance run right to fill that end dog. And it filled it, close past it just a little bit, which is something you kind of want to see, actually. You want to see it wick outside, color outside the lines a little bit, because it's like, it's making sure that it's filling the end dog. You know what I'm saying?
Mm-hmm.
And then right after we do that, close right on the high of it, trade lower, sweep this sell side, and then the move gets deferred, and we trade back up. So this is what's going on here, is like a shift from low resistance bullish all the way up here to high resistance bullish. So like, I guess this block of price action I want to consider high resistance bullish, but I could be wrong about this. This is getting a little deep into the logic. And then shift to high resistance bearish right here. And I'd say it honestly stayed in high resistance bearish until we had a spooling event at 4:19. I don't know what happened there, I'm not gonna lie, but or 7:19 Eastern. And we aggressively sweep the sell side. I think there was a news event that looks like a news event type candle, but like the times don't really align like that. So I'm just gonna ignore it for now and assume that this was just manipulation. So like the hands stepping in, they're doing what they want with the market, they're dumping it. And I mentioned last night that I wanted to see it ideally try to trade lower into the 513 end dog. So this one, we overshoot it quite a bit, but drew there very fast. Very fast. And going into today, no 5:30 or 8:30 first presentation. So the first fair value gap after 8:30 Eastern, that one doesn't get like created. We just enter a time distortion. So like a slop. And I'm assuming this is probably a seek and destroy on a lower time frame, but I could be wrong about that. And then we finally break away higher. And then this can be your breakaway gap. You can combine the two if you want, but this is kind of like the most obvious one to me. And then we trade higher. Just missed the end dog right here. And trade lower. Use the low of the opening range gap to trade higher. Spend a lot of time above this buy side, kind of just consolidating. And then we sweep the sell side, sweep it again, and then sweep it one more time. And then right here, actually, it taps this order block, which is the lowest black candle out of all of this down movement. And the candle flips bullish right here. So that can just be like, oh, this might be time to go long. And then we've got a time-based breakaway gap. Or actually, this one wouldn't be your breakaway. This would be your breakaway. Because even though there's bodies laid behind this one, it's much more prominent that like these two up-down candles, like this fair value gap is right inside them, so I wouldn't use this one. So this is your time-based breakaway. And then next fair value gap doesn't form, but this is an immediate rebalance. Because we leave this block of price action right here. So when we leave that, come back down, immediate rebalance signature.
Wait, why is that an immediate rebalance?
Because we left this range of price action right here. And then third candle comes down to touch first candle's high with the little bit of room for imprecision. And then so this
when it gets retested too, that's kind of nice. Yeah.
Yeah. Yeah.
Did you record this or no?
I've been recording after a certain point. The beginning I didn't record.
That's fine. Okay, cool.
And then so that immediate rebalance takes us pretty quickly. Also, actually, I want to mention from today, if we take the opening range, 9:30.
Did you make a trade today, Hottie?
I did. It was like a little tiny scalp. I'll show you it.
Cool.
This
I recognized we were in high resistance, and then I just didn't take any I mean, I took a couple trades that I was just taking with a paper account, but I didn't take any I considered good enough for my I didn't take any on my actual journal because I saw we were in high resistance and shit.
Yeah. That's smart. I like that because if you're not in the perfect conditions, then what's the point? You know what I'm saying? You're just gonna screw yourself.
Yeah.
But one trade I was looking at earlier, I kind of wish I got into this one because this is a nice low resistance signature with everything else. So I already mentioned the breakaway gap and then the immediate rebalance right here. And then right after we create that, while we're working the immediate rebalance and consolidating this little block right here, it's closing right around the low of this end dog, and it's working the high of the opening range right here. So we've got multiple important points right around here. And by the way, Slazzy, I'm on a blank chart pretty much, so I don't have any of my first presentations on here. So there could be even more stuff right here that I'm just not seeing. But
I was gonna say my chart is literally just all presentations, bro. I might need to cut it down, bro. I'm not gonna lie, because
yeah, I saw the text that you sent about mine being cleaner, and I'll explain sometimes where I'll just remove a first presentation, or
okay.
yeah. But it's working the high of this opening range right here. Body's respecting the low, or kind of trying to respect the low, I guess. Immediate rebalance right here. And then we've got this order block. So you can take either this one or this one. It's consecutive candles. I would prefer to take the lower one because it's inside the end dog. It's within the end dog. So when it comes down and taps the end dog and the order block, and then the candle flips bullish, it's gone. It's for sure heading for this buy side pretty much. You know what I'm saying? It's...
Is your main indication of an order block being valid and price wanting to displace away from it is when it gets tapped into and the candle flips bullish?
Yeah, but then the thing is, I can't just wait for it to flip bullish. You'll see that fail a lot. For example, right here. This tiny order block, I don't know if you would consider it one, but even if you didn't, this one right here, the candle taps it right here. This candle taps it and flips bearish, and then we immediately spool higher it, sweep out the buy side and stuff like that, and then come right back down or whatever. But the reason why it won't work sometimes is mainly because high resistance, but also sometimes because you want to try to frame it around a discount. So although this isn't technically a discount, or it could be actually, let me check. So of this dealing range right here,
I think it is the discount.
It's so it's above the discount.
It's not.
Yeah. And
but I mean, the overall high time frame bias when that currently is bullish though. So
yeah.
Right?
But
at that point, I'm pretty sure I know the spot you're looking at on the chart, and I think the high time frame was bullish. So I guess you could use that, right?
Yeah, I mean, the main thing I like to do when I'm looking for an order block to flip bullish, you know what I'm saying, is I want to see, does it create some sort of a discount? So within current price action right now, as we're trading up right here, this is our discount level, okay? This breakaway gap right here, we can consider that a discount. That's nice and easy. When we displace away from it, now if we're in low resistance conditions, we don't want to see it return to this breakaway gap again. So now our new premium discount is from, let me actually take this stuff too. Our new premium discount is from this breakaway gap to the buy side. And still it's not in discount. What's it called? It's just when you're back here, you want to try to look for a long beneath this point. But then later on, we create this immediate rebalance right here. So I want to take it from the low of the candle that created them, or that was immediate rebalanced, to the buy side. So that's my newfound premium and discount. Okay, and this will only work if you're in clean low resistance conditions. I'm letting you know. And this, by the way, this wasn't clean low resistance, but this price run was, because it showed just multiple clean signatures, and there was no there was kind of no argument to be made that it was going to be bearish, especially like at around this point. There was like no argument. And so yeah, now we have an order block in a discount, and the high of the body actually lines up pretty closely to the 0.25 of the range. So that's another thing. And we've also framed the end dog as well. And then this is an inversion fair value gap right here, and the immediate rebalance. So like we've got stuff right here that's like, it should keep us from going lower. So that's why this is a discount, and that's why I would use this order block. But yeah, so flips bullish, and then pretty much immediate run to the buy side right here. And then when we sweep the buy side, one candle sweeps it, one candle comes right back down. And these are relative equal highs right here. Very obvious relative equal highs. So this is a potential Venom model in the forming. So I want to see, does it get treated as such? We trade lower, trade back up, tapping the old buy side one more time. Just making sure the orders are out. And then the candle that tapped the buy side also created an order block right here, right? This last green candle. We tap it right here and flip bearish. Okay, and then that's not super clean because we haven't closed past the order block yet. Wait, what were you saying?
Why is that an order block?
It's just the last... Okay, so let me go through the full logic.
Because I thought an actual valid order block had to be like like let's say we're looking at a bullish order block. It's the last like black candle like body, or you can use the wicks before a bullish, like I think it's 3 candles or more that sweep liquidity.
Yeah, I mean,
Isn't that a valid order block?
Yeah. Your definition isn't wrong at all. But you can take that a little bit further. So, like, yes, this is an order block, right? And by your logic, this is absolutely an order block, and I'd consider that an order block. But then right here, when we trade past it, and the move, I guess, gets, like, smallly deferred, enters a bit of a high resistance, just a reversal signature. But when it trades past this order block, we trade back up into it aggressively, and I can't take this as my new, so like the candle that trades up into it, the green candle, that's going to be a propulsion block, which is just another order block pretty much. But I can't use this one because we don't trade past it before creating a new order block that's higher. So I have to use this one. And this order block digs into this previous order block, which would be the obvious one. So last 2 consecutive green candles. And then when we trade beneath these 2 green candles, now this is like my new genuine order block, you know what I'm saying? And this is the point I want to use. And then if it's consecutive...
And how do you use it? You just want to see it stay in the lower half?
Yeah. So firstly, you want to... The order block in general, you want to see ideally stay in the lower half. But then if you take that a step further, you don't have to use the consecutive candles. Like, these are both in order block. You know what I'm saying? But then it's kind of like more data if you use like both. So if I just use the higher one right here, once we trade past it and then come back up into it, this candle flips bearish. And that's kind of like the perfect signature I was looking for. And then you can wait a little bit longer because we could still be in high resistance. Might want to make another run higher. So you can wait to see, does this fair value gap, the super tiny one, do the bodies respect it? And this wick right here, the wick that tapped into the order block, are we willing to stay beneath the midpoint? And what else? There was another logic there. And with the entirety of the order block, are we willing to relatively the body stay beneath the midpoint? And all three of those are yes.
What time was this at?
This was today at 11:40-ish Eastern.
11:40. Oh, you also you did have some presentation logic too. Those two hold up. You said 11:40?
Yeah, around there, Eastern time.
Oh, never mind. I was looking at the wrong spot. The presentation was higher, but there was presentation logic for the move down from when we flipped from high resistance bullish to high resistance bearish.
This?
Sorry, at like 2.
Oh, like 2.
At 2 p.m. Eastern. Like if
Okay,
you kind of go up.
I see.
You see what I mean?
Yeah.
Yeah, like that little like from
Yep.
2, that macro from like 2 to 220, there was a presentation there and it started working it, and then it came below and then it tapped it one last time and kept going lower a little bit.
Yep. This was my trade actually from today, my little scalp.
Oh, really?
Yeah. So I'll go into that in a second. But I'm just gonna quickly finish this up. Displace lower from that order block, and by the way, when you see the order block flip bearish, that doesn't mean we're gonna reverse and be bearish. You know what I'm saying? Like, I mean, short term, yes, it does, but that doesn't mean we're automatically gonna come down and sweep all these lows just because it did that. All this means, the fact that it did this, is that it's chasing discount PD arrays right now, or discount sell side liquidity. And by the way, the earlier frame premium and discount, after our target's been hit, I can't use that anymore. So then it's like the earlier premium discount I framed with like the immediate rebalance and the buy side. Once the buy side's been swept, that's gone. You know what I'm saying? Now it's this range, because this is kind of like the obvious range you want to take. And then now it's chasing discount PD arrays. What do we have in a discount right here? The previous time-based breakaway gap. And trade down into it, or almost trade down into it, create some lows right here, sweep the buy side. Use this for value.
Sorry.
No, you're good.
When you're, so like, this is low-key a question that I've been having, because like when you're in like kind of, I guess you could consider this like higher resistance conditions, like because we're kind of creating buy side, sweeping like short-term sell side, then sweeping the buy side, and then going back down and sweeping some type of sell side.
Yeah.
But so I've been having trouble with like getting a good entry at like topping these. So like I would enter like kind of similar to like that order block, right? But I've been making targets too low. Like let's say I made this trade, right? I would be targeting that sell side at the bottom of the range. So do you need to target like PD arrays instead that are within like the 0.5 to 0.25? Because that's like the OTE zone.
Yeah, I mean, all right. So that's definitely a partial. Okay, so if you're, I'm assuming in this scenario, you're super bearish, okay, and you really want to see lower prices down to this sell side, there still needs to be at least a partial right here. And that's exactly what you mentioned. Like it's in a discount, it's a PD array, it's around OTE too. And so you just want to be careful. And especially one thing with this, Like this was a good entry up here to go short. But then once you see this, it comes back up really hard, redelivers into this fair value gap and slams lower. Like literally one candle from up here slams to take out the sell side. That's telling you it's probably done. Or it's entering some sort of weird conditions that you just don't want to be participatory in. So you can especially look to take your exit down here, beneath this low right here.
All right, cool. Thanks.
Yeah, no worries. Yeah, but then in this scenario, I think we tap this order block right here. No, we just miss it. But yeah, we just missed the order block, trade into the fair value gap again, and then enter like a... I think this was a small seek and destroy actually, before we ended up leaving the range. So like buy side in premium, sell side in discount, buy side in premium, sell side in discount. And then from there, it's like there's no obvious buy side. It's probably a lower time frame seek and destroy. But that's how I would kind of interpret this price action right here. And then we enter a high resistance bullish scenario. And this I think there's probably some model that would have allowed me to try to go long, but like this whole price run higher, like I wouldn't be participating in that. Just because, or actually the one thing I could use is, let me see if there's a volume imbalance. No, I couldn't even use. The only model like I could have potentially used here to try to go long was when you have relative equal highs and you don't expect the reversal past them, so like you expect it to continue past the relative equal highs, which by the way we had org midpoint, I guess, or no, org midpoint was right here. Let's just say devil's advocate, we wanted to see it continue its speed past this buy side. When it sweeps the buy side, the candle that swept it, or I guess closed past it ideally, you want to see a volume imbalance form right after that. And that's the volume imbalance with speed that I like mentioned to you a while ago. Like that's kind of, that's when you want to see the volume imbalance. And you want to ignore it pretty much.
When you sweep relative equal highs?
Yeah, that's optimal.
Where's the volume imbalance in this?
There isn't one in this scenario, which is why I couldn't go long.
Oh, I see. So if there had been a volume imbalance formed right before that second green candle after sweeping,
yep,
and then it got respected by the black candle, you would have gone long instant?
Yep. Yeah.
That's a pretty cool model.
But you do want to be, you do have to have a strong bias, because you could get Venom modeled. You know what I'm saying? So like,
I'm wondering, can you like somehow write out the rules of the Venom model and show an example? Because like I watched the ICT video, I watched the trade review of the Venom model. I don't get it at all, I think maybe Gavin was having trouble with it too, or somebody.
Yeah,
Toshiro maybe.
I don't know it either.
It's a little bit confusing.
So if you could write out, like, even if it's like generalized rules or something like that,
yeah,
like to the best of your ability, I would, and like have like some sort of example, I would really.
Yeah, I got you. Let me also try to pull up an example real quick so it looks like, nice and easy. All right. Wait 1 second, I'll be right back. Alright. So we have all these relative equal highs. So I'm just going to write out a bearish scenario, and then you can apply it vice versa. And if you need that written out too, the bullish scenario, then I'll do it too. But just relative equal highs created. So all this right here. And then when it comes to sweep that buy side, or the relative equal highs, sweeps relative equal highs with a singular candle. And then it spends some time above it, which is fine, like 1-2 candles or something. 'Cause I think in ICT's rules he mentioned like it's just it's at minimum it needs to spend like 1 candle up here or something. But sweeps the relative equal highs with a singular candle, trades back beneath the relative equal highs with 1 candle. Also, I'm anchoring the highs. When I'm talking about relative equal highs, I'm anchoring it to the highest high. So it swept it right here with 1 candle and came back down with 1 candle. If it's not 1 candle and it doesn't look super clean, you want to look for a higher time frame for it to look cleaner. And if it doesn't look cleaner on a higher time frame, I'd say just avoid it unless it's like made clear to you. But yeah, so that's pretty much all of it. Relative equal highs created, sweeps the relative equal highs with a singular candle, trades back beneath the relative equal highs with a singular candle too. And then normally what this will do is it'll create a balanced price range. So that's kind of like the whole point of it. You want the balanced price range to be around the high. And then, by the way, the model that I really like to trade with I'm actually going to keep this text here. The model that I like to trade with the Venom model is the order block that trades into the high. So the buy side, the order block, when we trade beneath it, if that candle flips bearish, when we tap it, you're set. You know what I'm saying? Also, by the way, previous rules I could have waited for it to come up here, but it doesn't need to do that. Okay, so if I see it flip bearish from this third candle right here, the third consecutive candle of the order block, then that's okay. Like I'll use that too. And then trade lower pretty nicely, sweeping out all the lows back here. So that all the high resistance sell side built up when we've been in high resistance bullish, all the sell side built up, that's when it comes to sweep it. So that's the Venom model. It's not, I feel like it just takes time to get trained to see it. You know what I'm saying? Once you like see it a couple times, then it's easy. Do you guys need the bullish example, or are you guys good?
I think I'm fine. Yeah, I think I'm good.
Right.
I'll probably just rewatch the video later too to practice a little bit more.
But let me just ran into an example, a bullish example real quick, so I'll just go over that. So this is, by the way, Gavin, this is from the high resistance run we were measuring earlier, where we're just what am I trying to say? We're expecting higher prices, but we're in a high resistance, or we show high resistance. So we create these relative equal lows right here. So all these lows anchored right here. And I'm putting emphasis on the lowest one. We sweep it with 1 candle right here. So this 1 candle sweeps the low aggressively. And then we spend some time beneath it, which is fine. But then 1 singular candle comes up. And it, by the way, this 1 candle, like, what I mean by that is it needs to be like relatively beneath the low, and then that candle needs to like go close above the low. What I'm saying. So what that would do is it would create the balanced price range right here. And I'm taking the balanced price range based on the specific fair value gap that swept the low. And let me see if there's any. There's no like time-based signature I could use here beside the. I guess this would be your time-based fair value gap. But the lower one is slightly more optimal because it swept the lows and there's no bodies laid behind it. For the higher one, the bodies are like pretty far back, so you could still consider it, but this is just more optimal. And yeah, so that balanced price range, use that to trade higher. And it stays in high resistance, you know what I'm saying? It like, so at first when it creates it, taps the end dog and stuff, and the first 3 PD arrays don't hold up. So you can expect high resistance from that already, so that's first signature. But then we tap the bounce price range and start going higher. You can assume bullishness from there, but then we failed to displace and sweep the sell side one more time. That's like, you're in high resistance. And yeah, so that's kind of the Venom model there. It's still bullish because the Venom model and let me see. I don't see too much otherwise besides the Venom model. Like, they would have to be some sort of high time frame draw for you to expect bullishness. But yeah, because of the Venom model, I would expect higher prices, and we deliver that, but in high resistance. Later on, it comes back down, sweeps it again, stays in high resistance, and then it finally leaves it right here. But yeah, let me see. I'll go over another trade real quick, and then I gotta head out.
Did you just change your profile, Gavin?
Yeah, it's working.
I was like, I swear I looked away for 1 second and your profile changed.
I think it just updated because I did that a while.
Oh, shit. Wait, Gavin, are you still on the, you passed a prop firm challenge, didn't you?
Yeah, I'm still on the sim funded.
What does that even mean, sim funded?
It's like the Express, right? Or like, you know.
Yeah.
So you're on a account then, right?
Yeah.
Are you doing good or no?
I mean, well, no, dude. That one day that I like overtraded, I just haven't seen anything since that I wanted to like take to be sure.
Yeah.
Yeah.
No, I mean, that's good, bro. You're maintaining discipline. Like, sure, you had one day where you went crazy, but still came back. You know what I'm saying?
Man, hit crazy, bro. And fearing released that video. It was like, how to deal with losing streaks, bro.
I'm gonna explain this other trade from the other day. By the way, JJ, that one that you asked me to explain, the one I told you I took the other day pre-market.
Oh yeah, like the 3K trade.
Yeah. I'll send
I just
like
saw that on your TikTok and I was like, damn.
Yo, by the way, that trade, I took it off like I think around here or something, or somewhere around here. And yeah, if I just kept my stop, break even, and just held it, bro, that would have been a crazy run.
Yeah.
But yeah, I'm not mad. But I'll explain that one later. I'll send like some pictures and stuff because that one was a little bit more complex, and there was some like logic. Even like I was like, okay, you know, like what I mean is like, I pushed it a little bit. You know what I'm saying? Like this was a higher risk entry, and the logic wasn't like super like pristine. Like, I don't have so much experience with that logic that I've used it so much, you know what I'm saying?
Yeah.
But yeah, I'll go in depth about it on the picture. But I do want to explain this other trade I took. I think it was right here. So, no, it wasn't. Oh wait, it was right here. Tweaking. Okay, so the trade that I took, we had a 15-minute bounce price range back here. So let me go back to Wednesday.
Why can't I open your stream?
Let me reset it. It tweaks out sometimes.
I don't know if it's just
Hello? I got it. Yo, hello? Yo. Oh my god.
Yep.
Yo, hello?
It's like short term.
Yeah. I don't know. I think I kind of want to like. I actually like really like the rules on my fund of futures, so I might stay on it. And then if I get like if I end up passing and getting a payout eventually, then I might swap over to like. I just think it's easier to get a payout than any other platform because all you have to do is have just a winning day for 4 days or something like that. Like it doesn't even matter how much. So that's why I like the payouts.
Can you see now?
Yeah, thank you.
Yeah, no worries. Okay, so for that Wednesday trade, I was looking at this 15-minute bounce price range, so the overlapping of this bearish fair value gap right here and this bullish fair value gap. And the reason I held more importance to the bounce price range is because Venom model. So 2 relative equal lows right here. And one singular candle sweeps the lowest low. And then one singular candle comes all the way back up. So this is the bounce price range that I'm looking at. And then going back to the 1 minute. We get deferred around here, so you'd want, at this point, you'd want it, my bad. You'd want the bounce price range to hold up, but we end up getting deferred and it trades back lower. So if you did take a long, which by the way, I don't really see a low time frame model, but I could be wrong. But yeah, I don't really see a low time frame model, but if you went long somewhere around here, this would be like a break-even stop. Yeah, and then we trade lower, spooling. So, by the way, I want to mention, we've been in, like, high resistance. So, like, from here to here. First time, you have to allow it to show one signature of high resistance. But later on, we continue showing signatures, like, we just grinding lower, you know what I'm saying? Like, it might look like low resistance at a certain point, but all this is doing is, like, setting the trap. So let me explain that real quick. So we're in high resistance bearish. I mentioned that. So, like, this retracement and then this retracement. That's, like, your two signatures that, yeah, we're in high resistance bearish. And then from there, we start trading lower. And you might assume that, hey, we tapped the NWOG low right here, and we're displacing so I can go short. You know what I'm saying? But in this scenario, you can't. Like, or you can't in any high resistance scenarios. You know what I'm saying? Because, like, if it's really gonna extend itself past this sell side pool, this one right down here, I really want to view that as like a potential trapping trader short to go long. If it ran lower, it would have run without me. I would have ignored this signature because of the conditions, you know, high resistance. So any run lower beneath this low, I want to see. Normally in a high resistance, you know, it'll sweep the low and then pretty much immediately come back to sweep some buy side, and then it'll trade lower and then, you know, do the whole shebang. But then if it picks up speed past this low, and not like the good speed, you know what I'm saying, if it just like extends past this low, then I want to view that as a trap. And I want to see, do they aggressively expand it away from there? And it needs to be very fast and aggressive. So that's what I'm watching. And then this was good. We aggressively, we try to sweep this low right here, actually. And we get pretty close in proximity to it, a couple points off, and then we reverse. And then that's kind of like the trap that I say. And then create this fair value gap right here. And if it's going to tap the low of the fair value gap, so normally you want it to stay open and be treated like a breakaway gap, even if it's not time-based, it's still the first fair value gap. You want to ideally see it treated as a breakaway gap, but if it fills the fair value gap, that's okay, but you need to see it expand away quickly from there now. And what happens here is we tap it, spend one candle trying, and then next candle, market opens 9:30, boom. You know what I'm saying? And now we've got this as our breakaway gap, or expected breakaway gap. And what do we do? What do we create right here? A volume imbalance right here. And what are these? Relative equal highs. So volume imbalance logic is there. Pretty much every other logic is there. The high resistance logic is there. The breakaway gap logic is there. The expected breakaway gap, fair value gap fill logic is there. And then the 15-minute balance price range, I wanted to see it get tapped again. But whenever you do something like that, like limit order wise, you want to put it 1-2 ticks. Like your limit order, you want to put it 1-2 ticks above whatever point you're looking at. So like if I was trying to go long inside of a fair value gap or something, or let's say this fair value gap, for example. If you can, like if there's something telling you it's going to go deeper, like let's say this breaker, something like there's a more discount price you could go for, try to go for that. But if you're just looking at a fair value gap and you know that this fair value gap's going to hold up, as soon as the fair value gap gets created, you want to put your limit order at the fair value gap high plus 1-2 ticks.
Is that a unicorn model that you're looking at right now? Because you have can you scroll down? Mm-hmm. Or like, because you sweep liquidity? I guess it would have to be down there more, because it has to be like higher high, lower low. Or it would be a lower high, higher high, lower low, and then a higher high again.
Oh, yeah. So that's still here, don't worry. That's still here. This breaker, low, beneath the low, so that's a lower low.
Oh, it is there because it retests because you have the fair value gap and the breaker.
Yep.
So it is a unicorn model. Huh. Dude, I've been really liking the unicorn model, I'm not going to lie. I didn't even know that it was a thing, bro. Like, I think I don't know if you have read our DMs from last night, but I messaged you at like when I was like, because I've just been trying to learn breakers. That was like the main thing I've been working on.
Yeah.
And I was like, I messaged you like all these compliments, and I was like, is this an ICT entry model? Because like I've noticed it works a lot while I'm back testing. And then like 10 minutes later, I realized it was the unicorn model, and I was like, oh shit.
Okay.
Yeah.
a lot of people have named it the unicorn model, but I see this is not like, this is a good model, and ICT will use this. But just naming wise, it's not. ICT doesn't call it the unicorn model. I'm just letting you know it's not a big deal to me. I don't care, but it's not technically the unicorn model.
So he doesn't even have it isn't an actual model that he considers, or
No. So this is still there. Like breaker plus fair value gap. That's still there. You know what I'm saying? And that's definitely a good model. You've got your bias. You got your other confluences. And yeah, that's solid. The unicorn model is slightly different. It's just, I guess in this case, it might actually be this one. But it's when the market proves its bullishness. So like down here, as it's trading into this fair value gap, that could be your low risk buy. Because it's technically a higher risk, but because you're more likely to get stopped. But you can go long here, expecting it to create the breakaway gap at 9:30, and expecting this whole thing to be a trap. So that's your low risk buy down here inside this fair value gap. Second, first stage distribution, I could be wrong about this for sure. I'd consider it this as it trades down into this volume imbalance.
Wait, are you saying this is like a market maker buy model then?
Yeah,
you're talking about like first stage and second stage distribution.
Yeah, so this would be, market maker buy model wise, this is original consolidation.
First accumulation, second accumulation.
First accumulation, second accumulation, smart money reversal down here. Low risk buy right here.
Didn't tap into is that box you have marked out? Is that a high time frame PD array?
That
super wide box.
Yeah, that's a 15-minute bounce price range.
Oh, okay, that's why. I was wondering because it didn't sweep liquidity, and I didn't know that there was a PD array that it tapped into. Okay, yeah, makes sense. Because when I was back testing it, I was mainly just looking for. I would look for a high time frame sweep of like some type of prominent low, so previous day low or relative equal lows or something like that, or I would look for tap into like a prominent high time frame PD array, and then I would look for market structure shift. But if you have a market structure shift, then you also have a breaker.
Yep. Yeah.
So I would see both of those, and then I would look for I would want as soon as you tap into the PD array, I would look for heavy displacement. And then once it does that, it creates the fair value gap inside the breaker. And then I would mark both those out, and then I would enter on the retrace. And some people say to wait for it to go inside and then come back out. No, I just enter straight on the tap, because sometimes it just taps and it ticks in twice, and then it just turns around immediately.
Yeah.
So I just enter. I put a limit order right at the high, and then I put the stop below. If the fair value gap's poking out, then it goes below the fair value gap. It goes wherever the last confluence is.
Okay.
Between the breaker and the fair value gap. Yeah. You know what I mean?
Yeah.
To give it room, because sometimes it wants to work all the way. Like that one that I sent you with the two fair value gaps.
Yep.
You have to let it work to the higher fair value gap.
Yeah.
Inside the breaker.
I think this is a 2022 model, right?
It's a part of it. Okay. So the actual 2022 model is literally just the liquidity sweep,
market structure
change in the state or market structure shift, and then the fair value gap, retest fair value gap.
Okay,
but this one just combines the breaker, this one just combines the valid order block being displaced past and retraced into, and so it just changes it from resistance to support, basically.
Yeah. I see. Yeah, that's solid.
So I don't know. I mean, it doesn't happen as much as I'd want it to, but if I see it, I think I'd consider it. Because what I've been doing now is I realize if I just stick to one literally exact model, I need to kind of do what you do, where you have you have an overall model, but then you have individual entry models, because just picking one entry model it doesn't pop up enough. That's why I was having trouble with the 4 hour, because at first when I was doing it, there was like a setup every day, but then there was like one a week for like 2 weeks straight. So then I just got cooked on my evals.
Yeah.
So I want to have like a couple entry models, but I want my overall model to be like your model, like using like the reference points and using high time frame bias and things like that.
Yeah, yeah. Like I mentioned the other day, you definitely, like, for every trade, you need the one model that tells you like where it's gonna go and why it's gonna go there. And then the second model, the entry model, is telling you that it's gonna run from here. You know what I'm saying? So like that's perfect.
Yeah.
What
model do you think, like, what entry model do you think you use the most?
I mean, I'm not gonna lie, I switch it up pretty often. But I'd say overall my most entered model is probably the advanced gap theory, which is just the breakaway gap and then the institutional order flow entry drill. So for this, for example,
does ICT have a video on that?
Yeah.
Advanced gap theory?
Yeah. But then his is super, I hate his video on that. I'm not gonna lie. I don't hate his videos, but like I genuinely don't like this video at all. Cause he's just so general about it. And then there's just so many other kind of rules, I guess, that go into it. And it's just a 47-minute long video, and he just doesn't go into too much depth, which bothers me.
But how do you know the rules if he didn't go into them?
I developed kind of my own rules, you know what I'm saying? And then most of
you gotta teach us one time in a session on your version of gap theory, because I'd like to hear it.
I mean, most of it I've kind of like already taught. It's just like the way I like to use it is just what's it called? You can't just, the thing is the way he uses it in the video, he doesn't explain that like it needs to be with something. Like I still include another model with the advanced gap theory, like the model that tells me where it's going to go and why it's going to do it. You know what I'm saying? But then he doesn't explain that you need to have that. So like when I was first going into it, I was just looking for a breakaway gap to form, and then the next fair value gap should be institutional order flow entry drill. And it's not always going to be like that. You know what I'm saying? Sometimes
the entry drill shit is just when it like comes and taps the CE of like a fair value gap, right?
It doesn't even need to tap the CE. It just taps the fair value gap and then goes higher. Yeah. So like right here, for example, this would be your breakaway gap. I'm going to take the 15-minute gap off too. This would be your breakaway gap, and I got to include the volume imbalances. And then it's not optimal when it's like this, but this is your institutional order flow entry drill. So it's not optimal when they like align like this, but because of the conditions, so like by conditions I mean we're in a market maker buy model, and this is a determined breakaway gap. We know that pretty confidently, and so that means like the next fair value gap should be the institutional order flow entry drill. And the reason like this one is still good is because we're getting so close in proximity to the target, but it's good to give it a little bit of weight. And the signature that would let you buy this fair value gap is we close inside of it right here, and then it's only wicks. So, and also this is the 931st presentation. So, another thing with that. But yeah, close inside of it once, displays, like leave it aggressively. And then when we trade back into it, it's only wicks in there. And then that's kind of exactly what you want to see. And then any of these wicks, or I guess ideally it would be the second one or after, is going to be your long entry, your potential long entry. And then you can take it for the buy side. And let me actually apply something to this real quick. So if you, with the advanced gap theory, you'll see, and it didn't end up playing out this time, which is fine, but you'll see that here it talks about measuring gaps, which is just going to be, so it's breakaway gap, institutional entry drill, and then measuring gap. And ideally the measuring gap is going to be beneath the buy side, but then in this case we really ramped up, so you can allow for, I don't know if I'd use this as a measuring gap. I didn't on that day, but I think you can allow for it because we really ramped up. And then the idea of the measuring gap is just when it's created, you want to grab the midpoint, and then you want to measure a fib. So like I'm using the gone box right now, but if I took a fib and I took it from the low before the breakaway gap to the midpoint of the measuring gap, -1 standard deviation, that's usually going to be your projected range high. So that usually means you're going to either reverse here or just enter weird conditions, I guess. Like you're either going to reverse or you're going to, how do I want to say this? Or you're going to go deeper into the range. You know what I'm saying? So like back here, actually, ICT, I think it was because of this. He was expecting it to want to trade down to these lows or something, or this fair value gap. He wanted to see it trade to the midpoint. So the measuring gap, he wanted to see it get attacked. But then what we do here is we create this one candle, which we begin to consolidate in, seek and destroy, small time frame. And then we leave it bullishly. And while it's doing this, you can go check ICT's tweets. He's saying this sell side is too clean. And the fact that we didn't touch the measuring gap, he didn't mention the measuring gap, by the way, but I think that's the logic. But he said the sell side is too clean. I can't go long. And that's one thing you should try to keep in mind when you're like trading, is like if something's too clean, if one side looks too clear that it might want to attack it, just avoid it. You know what I'm saying? It's like mixed conditions, I guess. And technically, this is going to be like our discount level. Or like we want to see it trade beneath this. This is like our, I guess, 50%. Like this, beneath this is a discount. Above this is a premium. So you want to see it trade down into a discount. And if it doesn't do that, then you don't have a long, because it's just staying within a premium, and that's usually going to be a trap. So like at the end of the day, it ends up sweeping it, and you're not always going to know when the trap's going to end, but sometimes there's a couple signatures that tell you. So like right here was pretty clean. Order block inside the end dog, flips bearish, displaces lower. So this is like the original model. Displaces lower. We're willing to stay beneath this, or this low, and then I don't know if you could have gotten an entry. I mean, I guess the entry could have been, so when you see it displace, yeah, I can't really frame anything from that. But I guess you could say like potentially this order block, it taps it and flips bearish, but we didn't even like trade past it yet. So I wouldn't say there was really an entry model here. Like it taps this end dog right here, but it's already so deep. It swept the sell side already that we were looking at. So yeah, sometimes you're just not going to get an entry on the way up or the way down. You know what I'm saying? Sometimes it's just going to run without you, and you got to be okay with that. Because if I tried to go short somewhere here, and let's say I somehow, like I saw it trading lower and I was like, shit, I really want the short, and then I just go short right here, like as it's trading down in this candle, this wick, then when it's trading up right here, I'm going to be too scared, and I don't really have like too much logic keeping me. Like I know my stop has to be higher. So I'd want to hop out the whole time. I wouldn't be comfortable. And that's why I would avoid that situation. Let me see. I'm gonna hop off in a second. I'm just gonna project opening range real quick. So yeah, so you're not always gonna get the high either. Like, you know what I'm saying? Like, it's not always gonna be super predictable exactly where it stops. But another way you can expect it to kind of want to come down from here. We got all these relative equal highs built up, and I think we just missed this high right here. Could be wrong. But yeah, when we just missed that high right there, that's kind of like the trap again. So like, we've been in this whole thing, high resistance bullish, this whole price run, and then the trap is up here, failing to sweep this previous day high, and then breaks. So I think that's gonna be it for today. My bad if I was.
Yo, Hadi,
Yo.
do you think that the market's like harder to trade right now than it normally is?
I'd say so. I mean, there's been some really easy price runs here and there, but I feel like before Trump got elected, low-key things were pretty easier. But then there's certain stuff that's like really easy about like today's market too. Like, you'll still see like nice easy price runs, but yeah, it was definitely probably easier when before Trump was put in office. I think there was just less manipulation going on, honestly.
Yeah.
I never say that.
But what'd you say?
Trump says a word and it's over, dude.
Yeah.
Bro, don't let Trump talk, bro.
Yeah.
Bro, you saw, Gavin, did you see that video I sent in the TikTok, bro?
Yeah,
it was
bro.
like the dude that goes, it was like China and the whole thing just fucking. Bro, that shit was so funny, bro. Oh, all right. Well, appreciate the lesson, Hadi.
Yeah, no worries,
Yeah,
bro.
See y'all later, bro.
Later, guys.
Later.